I respect Elemental Altus' management. I think they've done a great job of buying royalties. They have a focus on Australia, but they also do it elsewhere. And their royalty purchase acumen combined with EMX's royalty generation acumen, I think the combination makes for a great team.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Today we have our resident mining analyst, Jordan of Mining Stock Monkey. Jordan is an expert in dissecting company balance sheets and finding undervalued opportunities. He does deep dive research and has a relentless curiosity about the metals and mining sector. In today's discussion, we're going to talk about gold, silver, copper, oil, and uranium. We'll ask him company-specific questions, the ones that you submitted. Jordan has a special gift for you, so stay tuned for that. Jordan, thank you for coming back on the show.
Glad to be here, Steve. Thanks for having me on.
You're welcome. Thanks for coming on. Okay, we got a lot of questions here. Maybe more than we could get to. We'll see. Let's just get right into it. A lot of company-specific questions. Let's start off with gold and the gold miners. Chris wants to know, what are your thoughts on I80 Gold?
I think it was the first interview I did with you. Somebody asked me about that, and I had spent a few days researching it. And the conclusion that I came to was this management team is trying to do way too many things at the same time, and they're failing at all of them. And so that combined with their ugly balance sheet at the time made me want to avoid that company. Since then, a little while after that, the stock ended up falling 70 or 80%. But then a new management team came in and they recently got permitted for construction of one of their mines. And now they've just started construction. So maybe it's time to revisit that company again, but I would have to do more research.
Okay. Johnny wants to know, hey, Jordan, what are your thoughts on Altius Minerals?
I love this company. If I had to take all of my money and I could only put it into one stock and I had to keep it there for the next 20 years, I would put it all into Altius Minerals. Brian Dalton is so good. For me, that's the most trustworthy management of any company that I know. So I'd be very comfortable putting my entire net worth into that company for many years. But it's a long-term hold. That management team thinks in very long-term time horizons. So while most management teams are looking at the next quarter, that management team is looking at the next quarter century. So your investment time horizons have to align with management's time horizons if you're going to be investing in that.
Okay, that sounds like you like that company a lot. All right. If you could only pick one, that would be it. Okay. Craig wants to know, and also Reels wants to know basically the same question. They're asking, they would be interested on your update of B2 Gold. What do you think of B2 Gold?
B2 Gold had a lot of bad news across 2024 and also into 2025. It's taken them way longer to get their permits in Mali than we expected, and that's where a significant portion of their production is coming from. So the future of B2 stock price depends a lot on Mali politics, that they can continue operating that mine and operating it profitably. Their profit margins on that mine, or at least their AISC, went way up because of a deal they made with Mali, basically to keep the mine in good standing with that dictatorship there. Barrick Gold decided to go another direction with their Mali mine, and then it basically got seized from them. That process is ongoing, but who knows if they'll ever get that mine back. So it looks like B2 did the right thing there, but it cost them a lot of money. So where the stock price goes next, I mean, of course, it depends on the gold price. It depends on how the ramp up at their new Goose mine goes in Canada and northern Canada, where their nearest neighbor is Santa Claus. And then it depends on Mali politics. And if they can get that Fekola regional permit, I think I always say that wrong. I think it's Fekola, but I always pronounce that wrong. But yeah, that regional permit is going to be really important. But I think that's inevitable now, actually imminent. I think that's going to come, but by the end of Q3. So 2026 guidance should look pretty darn good for B2 Gold. And I think the market will move up when they issue 2026 guidance.
Okay. All right. So it's dependent on gold price, their goose mine, and the Mali. What's going on in Mali right now?
Mhm.
What percentage would you say of that company's market cap is tied up in Mali?
Market cap, I couldn't tell you, but production, it's a little over 50%.
Oh, wow. Okay.
But in terms of market cap, it's just like what each individual investor values each mine at. So,
Yeah.
I mean, I don't feel like that's for me to say.
Okay. Okay. And what any new updates on the goose mine?
Uh, yeah, they poured first gold and now they're ramping it up. So now we're just waiting to hear details on how the ramp up is going.
Okay. All right. Okay. Bit of a selfish question. I've got a long dated call option on B2 Gold, and I think Q3 might be the time to let that one go. Okay. Equinox. All right. One of our little darlings here. Uh, so many people asked about Equinox here. Happy, Robin. Um, what do you see for Equinox if Greenstone and Valentine are in full production?
I mean, the stock price is probably going to go higher. Back in uh, around July, the stock price was around $6 a share. And I told my newsletter subscribers that this is one of my most bullish cases in the portfolio right now, probably the most bullish. And I think this will be at least a $10 stock in the next 12 months. Well, it turns out it took like 3 months for that to happen. It's basically a $10 stock right now. After their, oh,
There it is.
sorry, sorry, I got distracted. The screen went black. I thought you cut out. But yeah, about a month ago, I told my newsletter subscribers, hey, if you've missed the rally in the gold stocks, I think Equinox will be the next stock to move because they have everything lined up for them. They have the Greenstone mine, that's where a ramp up is imminent. They're going to pour first gold at Valentine very soon. And also, they got a brand new management team that's much better than the last one. So all the stars were aligning for Equinox. So I was very adamant that, hey, you should get in now. And I mean, I didn't think it would happen this fast, but the stock price would straight up after that.
Yeah, you're about 5 cents shy of your $10 target there. So well done, sir.
But now that the gold price is approaching $2,700, my calculations change. And now, of course, the gold price has helped that stock price movement. But it was mostly the updates with the Greenstone mine as of the last quarter earnings.
Okay, you mean $3,700 gold?
Is Yeah, whatever I said, I meant 3,700.
Okay, all right. Okay, Everett wants to know, do you believe the success of First Quantum Mining and First Majestic Silver, both of which were as low as 20 cents and have both been higher than $20, will be reflected in the newest venture, First Mining Gold?
So with what's First Mining Gold at? 20 cents per share, something a little north of 200 million US market cap.
It
To
is,
get to
yeah.
to get to $20 per share, it would have to be a $20 billion company. With a couple of mediocre gold assets in Canada, even though there are a lot of ounces there, I I don't see that much value. I don't see it ever getting to a $20 billion market cap. And they would have to put both mines into production and grow them like crazy. And how much dilution would come with that along the way also. So yeah, I don't see that happening. Definitely not in the next 10 years. But like I would push back on calling First Majestic a success. You look back at the cash flow per share that First Majestic has made over the last 20 years. I have a chart for you here.
Oh,
This is a 22 years of cash flow per share. This this line indicates 0. So anything below it is negative. Anything above it is positive. So of the last 22 years, 5 years, oh, sorry, have been positive. Just 5 years. 17 have been negative. And look at what the best years have been. The best years aren't even close to how bad their bad years are bad. So, I mean, would you pay if you had an opportunity to buy the entire company? The market cap is $4.6 billion. Would you pay $4.6 billion to lose money 3 out of 4 years and have your good years be not even close to as bad as your bad years are bad? I wouldn't. Not a chance. Will the stock price go up if the silver price goes up? Yeah. But I have zero interest in this company.
Myself included. Okay. Let's see. And Antonio wants to know about, you know what? Maybe give us a quick 30 seconds on what an optionality play is for anyone that's not familiar.
Sure. So that's basically betting on a leveraged play, something that's highly leveraged. For example, we just talked about Equinox. This would be a type of optionality play. So because it's so leveraged. Now, why is Equinox leveraged? Because they have a lot of debt, and highly indebted companies are highly leveraged to changes in the commodity price. And also, they have higher cost mines, and higher cost mines or a company with higher cost mines are more leveraged to the commodity price. So why is this? Well, I mean, debt, maybe that's kind of obvious, but I mean, if you have a lot of debt and you make more money, you're going to be able to pay off that debt a lot faster. But if you have a lot of debt and suddenly you start losing money, maybe you're at risk of bankruptcy. So, or at least a huge fall in the stock price. Now, in terms of high cost mines versus low cost mines, let's say gold's at $3,700 today, and somebody has a mine that has an all-in sustaining cost of $3,500 an ounce. That's an extremely high cost mine. But because the gold price is so high, they're making $200 per ounce. And if the gold price goes from $3,700 to $5,000 an ounce, suddenly instead of making $200 an ounce, they might be making $1,500 an ounce if all goes well. Like maybe there's higher royalties and maybe the oil price has gone up in the meantime too. But let's say costs have stayed flat and the only thing that has changed is the gold price. Then they're suddenly making $1,500 per ounce instead of $200 per ounce. So that's a very leveraged play. Whereas if you have a miner, let's take Endeavour Mining, for example. They're a low-cost producer. Let's just say they're at $1,000 per ounce AISC. At $3,700 gold, they're making $2,700 an ounce. But at $5,000 gold, they're making $4,000 an ounce, all else equal. So, yeah, how much money they're making per ounce went up, but it went up, what, 50%? Instead of 600%, 700%. So that higher cost producer has a lot more leverage to changes in the gold price. But that also works going the other way. If the gold price goes down, that high cost producer is quickly going to not be making any money, but Endeavour Mining will be making money at much, much lower gold prices. So that's one type of optionality play. Another type of optionality play is, hey, you have a huge deposit, but it's at low grade. And this isn't an operating mine yet, and it's going to take billions and billions of dollars to build this. And maybe at $2,000 gold, it's not economic, but at $4,000 gold, it's going to make a ton of money. So that's another form of optionality.
Okay, thank you. And that makes sense. You know, if he's only making $200 an ounce in the example, and the gold price goes up by that much, their margin went up by 6 or 7 times, and so their stock price is going to reflect that. Okay, so now that we know optionality, he's curious about the optionality potential of NovaGold and Seabridge Gold.
Yeah, both of them have it. I'm not interested in NovaGold because I think they're just spending way too much money for a company, for a development company that isn't even building a mine, isn't operating a mine. Last I checked, I think they were spending 25 or $30 million a year. Um, and a lot of that is on G&A. And their CEO is making $5 million a year, which is totally absurd for non-producing. Like that's a salary of a major gold producer, like the CEO of a major gold producer, not a single asset development company. Now, I brought up this concern to Rick Rule when I interviewed him on my channel, and he's like, I'm also not invested in NovaGold, but Tom Kaplan, the one backing NovaGold, he's a billionaire and I'm not. So although I'm not interested in buying it, maybe I'm wrong doubting him.
Okay. And
Oh,
how do you
and
feel?
Seabridge.
Yeah, how do you feel about Rudy Frank and Seabridge?
I like Seabridge more. Um, but again, it's it's a matter of you got to be patient with it because it's a matter of when they find a partner. That could be tomorrow, or you could be waiting 7 more years. And if you're not patient enough to hold that stock until they at least get that partnership deal, well, then I think I think you got to have the patience if you're going to buy it to wait until that.
Okay. Yeah, well said. That is an enormous deposit, and there's probably three miners on the planet that can actually take it on. And you got to wait for one of them to buy them out. Johnny wants to know. He says Endeavour Mining has been lagging the pack of gold miners. What are your thoughts on Endeavour?
So Endeavor, I added this as a pick in my newsletter in late December 2024. I thought it was super cheap at that time. And in 9 months, it's up 110%. So, I mean, maybe that's lagging some stocks, but I'm never going to complain about 110% gain in 9 months. Uh, but you can make an argument that its valuation is still cheap, but it all depends on what kind of cash flow multiplier you give if you're valuing it on a cash flow basis, or what kind of discount rate you're using if you're valuing it on a NAV basis. And a lot of this depends on how much risk you place on those jurisdictions that they're operating in. So they have they have 5 operating mines, 2 of which are in Burkina Faso. And Burkina Faso is not a good jurisdiction right now, to put it nicely. There's a lot of problems there. And then they have, I think, 1 operating mine in Cote d'Ivoire, and also they have a very important development project in Cote d'Ivoire as well. And in that country, they're trying to raise the taxes on mining like crazy. So a lot of the valuation endeavor is what happens in Burkina Faso and what happens with taxes in Cote d'Ivoire. But they have a great they have a great growth profile with the Asafo project in Cote d'Ivoire. Incredible deposit there. We're going to be seeing a feasibility study on that later this year or early next, and then we'll probably see the mine build start shortly thereafter, and it's going to be about a 2-year mine build. But yeah, that's really going to help with their production profile going forward. And it looks like it's going to be at very low cost, or hopefully if those taxes don't get raised too much.
Okay, there's the chart. Looks like it's screaming like the others. That's impressive. All right. MK wants to know, have you ever heard of Dynacore Gold, and what do you think about their unique business model?
No, I'm not familiar with that.
Okay. Moving on to silver and silver miners. Tom wants to know, he says, he's first of all thanking you. He says you made him a lot of money, so thanks. Um, what are your thoughts on Silvercorp Metals?
Well, I mean, in terms of silver miners, these are probably 2 of my favorites. The 2 that he mentioned.
Silvercorp
But
and I80 Gold and Silver, yeah.
yeah, I saw his question earlier, but Silvercorp, it's probably the cheapest of the silver miners on a valuation basis, but that's because of the China risk. All of their producing mines are in China. So are you willing to take that China risk? That's a question only each individual investor can answer. I like that they're finally diversifying away from China. They bought Aventus Mining, and now they're building that El Domo project there in Ecuador. But they're very skilled in China, and they've proven that they can do their work really well there. But can they do the same thing in Ecuador? Totally different continent, different language, different suppliers. That's a big question mark for me. But I like the diversification. So uh, yeah, overall I like the company, but I'm not personally willing to take that China risk. Not as an American with the tensions between the two countries.
Yeah. Okay. And what do you think about Benoit LaSalle and I80 Gold and Silver?
Yeah, I like it. He's been successful in the past. I really like to back somebody who's been successful. It hasn't run up like crazy like many of the other silver stocks have. So it's potentially a reasonable valuation. I need to do some more research on that, and I could be a buyer at the right price.
Okay. Okay. Yeah, he's. I interviewed him at the Rural Symposium, and he's working on his sixth project. So he's 5 for 5. We'll see if he can do six. And the interesting thing about that mine that he's pulling out right now in Morocco is it's all silver, which is rare. You know. Okay, Real is asking, what's your favorite silver miner at the moment in anticipation of the looming silver rally?
Can I say none?
None? Okay.
No. So if I want to invest in silver, my first pick would be physical silver. But buying it at as low of a premium to spot as possible. My next pick would be Empress royalty. Uh, like, well, I was going to say 40% of their 2025 revenue should come from silver, but now that silver has rallied to over $40, that number is probably higher. Maybe 45% of the revenue is coming from silver, which is very, very high. Many of these so-called silver miners, popular silver miners like Core and Hecla only have 30% of the revenue coming from silver. Pan American, 20% of the revenue coming from silver. Or after they acquired MAG, I think it's 21% now, or 22%. But now that was before the rally in the silver price also, so all of those numbers have to be adjusted upwards for the $41 silver price instead of about $30 silver price. So yeah, first physical silver, then Empress royalty, and next probably Royal Gold.
Really? I didn't expect that.
Yeah, I mean Royal Gold still has a relatively small percentage uh, of silver revenue. It's not even close to what Empress is, but I think it's the most undervalued precious metal royalty company.
Okay.
Well, not technically true. Sandstorm would be the most undervalued because Sandstorm is being taken out by Royal Gold, and Sandstorm is trading at a slight discount to Royal Gold shares. So Sandstorm is a slightly better buy if you think that that transaction will be finalized, which I think it will be.
Okay. All right. I expected you to say Wheaton Precious Metals instead of Royal Gold. That's what I get for guessing.
I
Okay.
mean, Wheaton Precious Metals has a lot more silver exposure than Royal Gold does. But Wheaton Precious Metals has also gone up in price a lot more than Royal Gold has. And I think Royal Gold is a lot more undervalued than Wheaton is at this point.
Okay. Physical, Empress Royalty, and Royal Gold. There you go, Real. You heard it first on it to win it. What could happen to, oh, let's see, FM stock? Which one was that? That was, sorry.
They might be referring to First Majestic, but that ticker symbol is AG.
Yeah, I think he means First Quantum Minerals.
Oh,
I could be
well,
wrong. He's saying, what could happen to FM stock if huge short position leaves? Do you know anything
well,
about that?
I don't know what stock it is, and I don't know how big the short position is.
Okay.
But But my answer can apply to any stock with a big short position. So I can answer this. And a big short position is a guaranteed future buy order. They they have to buy that stock back. So if if you're looking at a stock that has a huge short position, you have a lot of guaranteed demand coming at some point in the future for that stock. But you better know that stock inside and out, because somebody who has a huge short position has probably done 10 times or 100 times the amount of research that you have. So it's highly likely that they know something that you don't. So I would say be very careful unless you know that stock inside and out, forwards and backwards. You know absolutely everything about it.
Okay. All right. Good point. Okay, Francois, um, what is the feeling you have, Jordan, concerning the gold to silver ratio looking at history? Currently, it's 86. The last or the average last 10 years or so is 60. But when looking what is extracted currently, meaning out of the ground, the ratio is 7.5. Industrial aspect makes silver necessary and used for industry. Do you have any indicators concerning future trends? I'll pull up the gold to silver ratio here while you're talking.
Well, I don't put much weight into ratios like this because they have different demands. They have different uses. Yes, historically, there was a point in time where they were both primarily monetary metals. But now silver is primarily an industrial metal and gold is a big asset of the central banks. So, like talking ratios, although I don't put much weight into it, I have noticed that as it gets close to 100 to 1, it's probably a good time to buy silver. That's as deep as my analysis goes into that. But to bring up a couple of other ratios, uh, gold to platinum, for every 1 ounce of platinum that's mined, about 17 ounces of gold are mined. But the gold price is about triple the platinum price. So if it's just the ratio that matters, you would expect the platinum price to be 17 times the gold price, or about $60,000 an ounce, but it's $1,300 an ounce. And I mean, if we're gonna talk ratios here, I mean let's talk about the number of gold ounces mined versus Jordan's fingernails. Jordan's fingernails are way more rare than gold, but my fingernails are worthless because there's no demand for them.
Okay. Good point. Here is platinum divided by gold, kind of emphasizing your point. We're way down here. It's basically 3 ounces of platinum for 1 ounce of gold, but we can see during history here, there's been times where it's 2 to 1. But just because it's 17 times rarer, it's still not trading at 60 grand an ounce. It's trading at 13 or 1400. Okay. All right. Win wants to know. He says he believes you said Jordan once said silver miners have a long history of capital destruction, but all thrust in silver now. What is your plan? I'm not sure.
Um, Maybe he's asking what's my plan to invest in silver now that there's a bull market in silver. That's my best guess.
Okay.
Uh, my silver exposure is in pretty safe vehicles. So physical silver stored in a secure vault that's not at my home. That's first. And then you have Royal Gold, Sandstorm, Empress, all royalty companies, and I feel like I'm missing one, Origin. Um, four royalty companies, all with exposure to silver. The most exposed of those is Empress. And then below Empress, it's much lower, but actually I have Altius Minerals too, and they have some silver exposure as well because they have a royalty on Silvercorp's El Domo project. But yeah, those aren't companies that are really going to take off in a huge silver bull market, but you will see that reflected in their income statement when silver prices go up and they're getting more revenue from their silver ounces, their silver royalty ounces. You will see them making more money, and those stock prices will move up. And I would rather do that than take the risk of buying a company where their cash flow per share looks like this. And Core and Hecla would look exactly the same or very close to that as well, where almost every year they're losing money on a per share basis.
Okay. So what's your plan? Like, as far as trimming and taking profits, are you looking at like $50 silver price as a time to do it, or are you going to be looking at ratio charts? What's your plan for trimming?
Uh, those those are stocks that I may hold forever because so as as the precious metals bull market goes on, the riskiest stocks to be in are the miners. Because when those metals prices reverse, the miners get hit so hard and so fast. They fall like crazy. Whereas, while the quality royalty and streaming companies, those will still fall in price, but they won't fall nearly as much. And if you're looking on a comparative basis, you will be able to buy a lot more shares of miner after the gold or silver price falls, after that bull market peaks, if you were holding on to a quality royalty company and were to sell that company and buy the miner in the bear market. But you can hold these quality royalty companies through the ups and downs. Yeah, you will have periods of 5 or maybe even 10 years where the stock is down, but they perform so well in the bull market and so well over time that I think it's worth it. Just go look at a long-term chart of Franco-Nevada or Wheaton Precious Metals or Royal Gold. These precious metals royalty companies that have been around the longest. And you'll see that over time, their stock price goes from the bottom left to the upper right. There's ups and downs along the way, but they very consistently move in that direction. And why is that? A big reason for this is because in those bear markets, they typically, these quality royalty and streaming companies typically have a very strong balance sheet. And in those bear markets, they can buy awesome assets at huge discounts. And they're cashed up to do so because they've made so much money in the bull market. So they have so much cash on hand and have such a huge revolving credit facility that they can deploy $3 billion to acquire top tier assets in the bear market. So that's a big reason to hold these companies through the bear markets. And then if you hold it forever, you never have to pay the capital gains tax.
Yeah, I'm going to emphasize your point here, Jordan. This is Wheaton Precious Metals, bottom left, top right. And here is Franco-Nevada, bottom left to top right. Yeah, great.
And in that, there's periods of 5, 7, 8 years that the stocks were down over that time. But for those who have held on, though, they've had huge gains. And Franco-Nevada actually goes back a lot further than that, because I think it was they were started in the 80s, I believe, and then they ended up being bought by Newmont or one of the gold majors. I wasn't investing in the space at that time, or at least I wasn't familiar with it at that time. And then that major ended up spinning out Franco-Nevada again. So that chart of Franco-Nevada you see is only for about half of its history.
Okay. Good point.
But the previous history also looks similar from the bottom left to the top right.
Okay. All right. Royal companies and mergers. Okay. Lots of questions on EMX and Altius. CJ, Rafi, Jake, Dennis, maybe just go into your thoughts on the merger.
Yeah, so this is Elemental Altus. a different company than Altius. Elemental Altus merging with EMX Royalties. So
Oh, did I
both these
say
are,
Altius? Sorry.
yeah,
Yeah.
both of these are royalty companies. Both have exposure to copper. EMX has a lot more exposure to copper than Elemental Altus did. Uh, the combined company, most of the revenue will be coming from, or well, a majority will be coming from gold, with most of the remainder coming from copper. And over the years, I think copper will increase as we get into EMX's a lower zone of the Timok royalty into production pretty soon. But anyway, so it's a copper and gold royalty company is what I'm saying in a very roundabout way. But overall, I like this. I think there needs to be more consolidation in the junior royalty space because too large of a percentage of the revenues of all the junior royalty companies are going to G&A. Probably on average, it's 25 to 30% of their annual revenue is going to G&A. In fact, some of them, it's more than 100% of their annual revenue goes to G&A. So there has to be consolidation. We got to get those G&A costs down relative to their annual revenues and relative to their market caps. And combining these companies will allow millions of dollars of savings in G&A immediately, which allows them to reinvest that money back into the business every single year. So I really like that fact. I respect Elemental Altus management. I think they've done a great job of buying royalties. They have a focus on Australia, but they also do it elsewhere. And their royalty purchase acumen combined with EMX's royalty generation acumen, I think the combination makes for a great team. What else about it? The shareholders of each company are going to own about 50% of the new company. The board is going to be split. EMX shareholders get about a 10% premium to September 4th closing date. So, I mean, I think EMX shareholders should be happy with any premium after the huge run-up that stock has had. So overall, I like it. I also like that they're doing a 10-for-1 share consolidation that will effectively reduce the shares outstanding to 10% of what they currently are, and it will increase the share price to be 10 times what it currently is. But why do I like that? Because it reduces the amount of money that goes to the market makers. That's my biggest problem I have with buying a low price stock. If you have a low price stock that's trading at, let's say, 5 cents, and the buy ask spread is 5 cents to 6 cents, that's a 20% spread. But if you can consolidate those shares 100 to 1, and instead of a 5-cent stock or a 6-cent stock, it's trading at $6. So instead of a 20% spread, maybe you have a spread of $6 to $6.02 or $6.03. So then you have less than 1% going to the market makers on every transaction instead of 20% or something horrible like that. So that I really like to see that. I don't like to see share consolidation when it's to hide a management team who's been diluting shareholders like crazy, and then they do a share consolidation to say, look, we only have 100 million shares outstanding, not a billion. But yeah, overall, I like it. EMX's CEO is going to be the CEO of the new company. I don't know how I feel about Tether being a huge shareholder.
That was going to be my follow-up. Yeah.
So they have really deep pockets. This is, if you don't know what Tether is, it's in the cryptocurrency space. They have an absolutely brilliant business model. They make money whether crypto goes up or it goes down. In fact, the more volatile it is, the more money they make, because traders, they want to have a stable vehicle to trade in and out of without constantly converting to fiat. So they trade in and out of Tether. So they're basically, so Tether is being loaned billions and billions of dollars at zero interest rate. And then they get to reinvest all of that money. And they're audited. They're audited quarterly by a third-party auditor. So you know that what they say they have in assets, they actually have, and they have at least $1 of assets for every one tether that's out there. And in the first half of 2025, they made over $5 billion. Uh, so yeah, it's a very good business. They're really smart people, and they have a lot of cash to deploy. They have over $100 billion in cash and short-term investments. So they're trying to allocate that elsewhere, and one of those places is in elemental Altus, and I suspect other precious metals companies as well. But anyway, they own, I forget, maybe something like 30% of the combined company. So they have a lot of sway there. And I don't like the board now as much as I did before Tether bought La Mancha's stake of Elemental Altus. It was La Mancha who was the big owner of Elemental Altus before, and Tether bought it. So we lost that La Mancha board member. We also lost. I say we, but they also lost Sandeep Singh, who used to be the CEO of Cisco Gold Royalties. So yeah, they lost some really good board members. At least they have Dave Cole, the CEO of EMX, on the board now. So overall, I like it. I just don't know how I feel about Tether having such a large stake.
Okay. Okay. All righty. I got some questions on, you touched on Royal Gold and Sandstorm. Cam is asking, and Robin is basically asking about this. Thoughts on holding or selling Sandstorm? What do you think?
Buy.
Buy.
Neither. Buy.
Okay.
Yeah. Yeah.
Okay.
The combined company is awesome. That's another case of where G&A is going to be reduced a lot, and it's all going to be reinvested back into the business. The combined company is going to have a lot of growth. They're in a much better financial position. Royal Gold, after the transaction went through, bought a massive royalty from First Quantum, or a stream, not a royalty. And that's going to do very good things for the business, I think. But yeah, I mentioned earlier that I think Royal Gold and Sandstorm are the most undervalued royalty companies in the precious metal space. And I only say that because Sandstorm shares are going to turn into Royal Gold shares. So buying Sandstorm is a proxy for buying Royal Gold. So it's Royal Gold that I think is the most undervalued, really.
Okay. And another royalty, Ecora Resources, TB, would like your opinion on Ecora.
Interesting. I'd be a buyer at the right price, but they have most of their cash flows coming from their coal royalty, and the mining at this coal mine is soon going to move out of where they have that royalty on. So pretty soon, I need to do a little bit more research to find out when that's going to happen, but pretty soon their revenue is going to fall off a cliff. And I feel like that might be a pretty good buying opportunity.
Okay. I'm having them on the show here at the end of the month, so I can pick their brain on that.
And the argument against that would be like, well, we all know that's coming. So why wait? And why do you think the stock price is going to fall if we all know that's coming? In my experience, even though it's obvious, the stock price falls every time. At least with these smaller companies. I mean, if you're looking at a huge company that's very widely traded and with huge institutional investors, those are probably a lot better at dealing with future cash flows, or appropriately pricing future cash flows. But yeah, that's an arbitrage opportunity in these small companies.
Okay. You know, I've noticed that is that it's like until people actually see on the balance sheet that the cash flow has gone up or down, it's like they act at that moment. Okay, moving on to oil and energy. Rio wants to know, do you still like Devon for a long-term oil and gas value investment? Are there any other companies that you like more?
Yes, I like it a lot. I follow the company very closely. They're reducing their share count like crazy. Their net debt is coming down super fast. and they're reinvesting into their business. So they're continuing to grow their business as well. And it's trading at very attractive multiples, whether you're looking at price to cash flow or price to earnings. Some might argue, okay, but they don't have a huge pipeline. They only have like 8 years of reserves. But they've been able to refrac these wells over and over and continue getting more and more oil out of these. And they have a deep pipeline. Or, well, before I move on to the pipeline, with these refracs, those reserves were supposed to be done after one time, but then they get to refrac it and they get a bunch more oil that wasn't in the reserves, and they get to do it again, and there's a bunch more oil that wasn't in the reserves. And then they also have a deep pipeline of acreage that they'll be able to convert to reserves at some point in the future. And they've made big investments into their acreage, and they have multi-decade inventory according to management. And I trust the management team. The management team are big shareholders in Devon. The amount of shares they own is way more important to them than their salaries. So I really like that. As for other companies I like more, I'm not yet going down into smaller oil plays because I don't feel like I know enough. And how do I feel like I don't know enough? So when it comes to precious metals companies, when I'm listening to the earnings calls, I feel like my knowledge of the company is usually exceeds the knowledge of the analysts that are asking the questions on the earning calls. So that's a pretty good judgment of like my own knowledge, knowing that I know the company better than the analysts do. Whereas when I listen to the earnings calls of oil companies and oil and gas companies, the analysts know so much more than I do. So that tells me that I need to learn a lot more before I start playing in any smaller names.
Okay. And if you guys care on, so fundamentally, green light from Jordan, and technically, this is one of my favorite setups. We have a Fibonacci retracement going back 5 years, hitting on my favorite retracement level, 61.8, and on the 200-day moving average, right where we are now. We were underneath this moving average forever, and we finally broke above it here a couple weeks ago. About to get a golden cross. I mean, this is like true TA heaven. I love this. I love it. It is absolutely a slam dunk if you have none and you care about technical analysis. That is a green light.
Steve, as you were looking up the technical analysis on that, or the technicals on that, it reminded me that a huge part of whether Devon performs well or not is what the oil price does. Can you do technical, or can you look at the technicals of oil too, to see if
Yeah.
those look good as well?
Oh, well, not necessarily. I think in the short term, let me pull it up here. And bam. Okay, so short term, I think what we've got here is we've got a bear flag in oil. And so basically it went like that. This played out in the last couple of days and it's broken down. So I think short term we could actually come down here to like 55. Now I've watched other TAs and they are actually have targets into the 40s, which kind of blows my mind. But maybe they're right. But I think oil will actually get cheaper. So you're saying that, if oil does what I'm seeing on the charts here and gets lower, then switch back to Devon. These little lines ain't going to be crap, and it's gonna get washed out as well. Is that what you're saying?
Yeah, I mean the stock tracks pretty well with the WTI oil price,
Okay.
and although they have a pretty significant exposure to natural gas as well.
Mm-hmm.
The problem with Devon is, well, they're not able to get market price for their gas. Only in a couple select basins are they able to get close to market price. But in one basin, they actually lose 50 cents per unit on their natural gas. And in other basins, the amount they're getting is only $1 or instead of the market price of 3.50. So they're working on improving those numbers. So yeah, it really depends on the oil price and not the gas price so much at this point.
Okay. All right. But we might get cheaper. We might get cheaper. Okay. Um, Crypto Joe wants to know about thoughts on Exxon, Agnico Eagle. You already touched on Empress royalties, so Exxon and Agnico.
I mean, Agnico, if the gold price goes up, the stock price is going to go up. If the gold price goes down, the stock price is probably going to go down. They don't have, although Agnico has huge reserves, uh, they don't really have much near-term growth. I think they're going to increase their production by 8% or something over the next 5 years. So that's very little growth in the big scheme of things. So it really depends on what the gold price does. It's a quality company in a good jurisdiction. They have a long history of performing well. But I mean, yeah, it's all about the gold price.
Okay. All right. And
And you
Exxon?
asked about Exxon, I think.
Yeah.
Uh, I I'm attracted to it. I want to know more though. I need to learn more about their midstream business.
Okay. Uranium. Derek wants to know, do you see Denison Mines taking a final construction decision in the next year?
They expect to get the main permit, the main federal permit that they need in Q1 of 2026. And that timeline is pretty well set because they already have their meetings set for their final meetings for October and December, and then the team of people from the government will review it and they'll review everything, and it's probably going to be approved. And if it's approved, I absolutely think they will make a construction decision shortly thereafter. So yeah, I not only think it will happen in 2026, but I think it will happen in early 2026,
No? Okay.
or
It's
at
good.
least the first half, let's say.
Yeah. Okay. All right. And you touched on platinum. Do you have any maybe just macro thoughts on platinum?
Overall, I'm bullish. When the platinum price is well below the gold price, it tends to be a pretty good time to buy platinum. But they're also pretty unrelated. And a, a lot of it goes back to the demand for internal combustion engine cars. They need the platinum or the palladium to keep the air clean. And so if we continue producing internal combustion engine cars and lots of them, well, then there should be a lot of demand for platinum. The thing with platinum is that a lot of it is a supply story. And most of the world's supply comes from Russia, Zimbabwe, and South Africa. Not not necessarily the best political jurisdictions. And if something happens in one of those places that disrupts supply, like well, that could create a huge increase in the platinum price.
Okay. All right. So you're arguing for more of an investment in the metal itself than the miners. Is that what I'm hearing?
Yeah, I mean, I would invest in a quality platinum miner, but I just don't know one.
Okay. All right. Okay. Kind of miscellaneous questions here. Guitar Freakazoid. He wants to know if gold continues its move upward, when or what price do you expect to re-enter a correction and consolidation? What signals are you looking for to tell you to take more profits from gold and precious metals miners?
I think that's a question for you.
Okay. All right.
At least the first part of the question. I think it's a question for you. So where would you take profits?
I'm actually looking. Well, let me show. I like to think that the fundamentals tell you what to buy, and the technicals tell you when to buy them and when to sell them. And so what I'm looking at here as the next price target, if I go here to the weekly on the gold chart. And I just run a really cool tool. It's called the Fibonacci extension. Everyone that's done my TA course knows exactly what I'm about to do right now. And we're just running from, the 2000 price of $250 and up to the top of the cup right here in 2011, then down to the bottom of the cup in 2015. And you can see all the Fibonacci levels right here. And the next one that comes up is 3750. So I would expect that gold is going to have some kind of consolidation here around 3750. And I think that, and you can see here, each one of these lines, like it's hitting some kind of price action or some kind of hiccup or, some type of, stall or so I would expect that on the next one up here at 3750, that's where we're going to hit. And the one after that gets kind of exciting. I mean, this is where we're getting up to 5,400, but let's get there first. The next level I'm looking at is 3750.
So are you looking at the red lines there, and then the downside scenario would be 2,400, or what are we looking for a downside scenario in a pullback?
Oh, in a pullback, the next pullback is going to be right here, 3,400. After that, it would be around 3,200. If I go to the daily here, if you look back over other precious metals bull markets, let me get rid of this Fibonacci here so it doesn't get too confusing. There we go. This blue line right here, this is the 200-day moving average. So I'm kind of looking at this as like the worst case scenario. Like, let's say we have a liquidity crisis. Let's say, great financial crisis 2.0. I'd be pretty surprised if we broke this 200-day moving average by much more than, a few percent. If you go back over past precious metals bull markets and their corrections, usually you get a pullback pretty close to the 200-day moving average. So every day that goes by, this is just creeping up. And I kind of look at that as like our worst, that's like our floor. I don't think it'll go much past that. So right now, today, that's at $3,104.
Okay. Yeah. And when I'm looking at past bull markets, I'm seeing a lot more corrections and more significant corrections in past bull markets than we've had it in this one. So I'm pretty leery of a significant correction here. Just speaking from not from a technical point of view, but from like my experience in markets and like what I feel in my gut based on my experience and what I've seen in previous bull markets. So, but again, I've been saying that since $3,000 gold, and now we're approaching 3,700, and so far we haven't really seen a significant correction. But as for me, the question about taking profits, like when it's time for that, as we get further into the bull market, you'll see my portfolio change from having a lot of miners in the portfolio to having almost no miners and having almost entirely royalty companies, royalty and streaming companies, because of what I talked about earlier in the interview, or maybe that was part one of this interview, that later in the bull market, there's a lot less risk in those royalty and streaming companies than there are in the miners, because the miners can fall so hard. You can easily see them fall 80%.
Okay. All righty. There you go. Guitar. Okay. Greg has one. Emperor Metals. Are you familiar with Emperor Metals?
Emperor?
Yeah.
Like king?
Yeah.
Yeah. No, I'm not familiar with them.
Okay. Settled that. Crypto Joe has one last question. Ivanhoe Mines. They had a big setback at a mine from some seismic activity months back. They've recovered, and their earnings reflect that. Their stock turned around. What are your thoughts on Ivanhoe Mines? I'll pull them up right now.
Yeah, if you look at a 1-year chart, they haven't recovered from that. So they've had some recovery since it hit the bottom after that mine failure at Kakula. Overall, I like Ivanhoe. There's a lot of good things going for that company right now. but you have to have serious stomach for political risk. The best they're in South Africa and Congo. So the best country they're in is probably South Africa, and South Africa's horrible. So you have a huge mine in a horrible country, and then two more mines in a country that's even worse. So I mean, the mines and deposits that they have are great. They own the best copper exploration territory in the world. So they're probably going to find a lot more high grade copper there. And they've had a lot of success, but yeah, you gotta be if you can't stomach watching your position fall by 50%, don't own this stock.
Okay, okay. Have you looked into their PGM assets at all?
Uh yeah, their Platreef project in South Africa is an incredible deposit. And between like the platinum and palladium and gold and what else do they have? Rhodium and copper and nickel. They have an enormous amount of every one of those metals. Like if they had just the gold from that mine in a mine somewhere else, it would be a world-class mine. Just the platinum from that mine would be a world-class mine. Just the palladium would be a world-class mine. But they have all of them. And it's truly an enormous ore body.
Well, thank you for coming on the show, Jordan. Always enjoy our discussions. We teased it at the beginning. You have a special offer for In It to Win It viewers. I got to say, your newsletter is my favorite newsletter of all the subscriptions I have. The portfolio is performing amazing. Go ahead and give viewers a snapshot of what they can expect if they sign up with you.
Yeah, so the newsletter is what I'm doing with my own money. I'm investing my own money in these companies. So my interests are aligned with yours, and to make sure my interests are aligned with yours, if I'm going to add a new company to the portfolio, you as a subscriber have a chance to buy that stock before I do. And if I'm going to sell a company that's in the portfolio, you have a chance to sell it before I do. I like to do that. So then there's never the situation where, hey, I bought this stock and then I recommend it, or I share that I bought it. Not, I don't like to use the word recommendation, but I share that I bought this, and then a bunch of other people buy, drives the stock price up, and then I'm like, okay, I think it's too expensive, I'm going to sell. And then like I just made a huge profit, but it was just because a bunch of people from the newsletter drove the stock price up, and that's not fair. So that's why you always get a chance to buy before I do and a chance to sell before I do. But yeah, anyone watching this, I'm going to offer a 10% discount to the first 75 people who sign up. I think Steve is going to put a link in the description and in the comments below. So if you click that link, it should automatically activate that subscription. But I've offered this before on Steve's channel, and it is sold out every time, usually within about 24 hours. So if you're watching this a couple days from now, it might not be available.
Awesome. Yeah. Thank you, Jordan. I can't say enough good things about your newsletter. Like I said, it's my favorite. And yeah, keep up the good work. You're doing a fantastic job.
Thanks, Steve. I appreciate that.
Yeah, you're welcome. Thanks for coming on the show. And thank you for tuning in. Go to stevebartonmoney.com for more and have a wonderful day.